Hello, retail traders. Today I'd like to talk about a trade strategy that I use. It's called the beach trade. This is a sneaky snake trading strategy where we study chart patterns, moving averages, and being in the now. Where every morning I like to call out what I call the beach trade. It allows someone that has a real tight schedule to get in and out and be done with their trade within minutes, maybe up to 30. It could go longer. It depends on what kind of day it is and how much time you have. But we're going to go ahead and talk about the IWM. The IWM is an ETF of the Russell Index, small cap index. And I think small caps are the ones that we need to be watching right now. Well, yesterday, which was Friday the 7th, we came in here and I said, okay, looks to me like we've got us a nice little flag formation. We're holding support from yesterday's low. So I pointed it out to the room and I said, we've got a double bottom with a higher low. And this could be a nice little pennant symmetrical flag breakout right at open. Right at open. There's a couple reasons why I like this trade. One, it had a higher low. And the second one, it had that 200 SMA as a pivot point inside of that pennant flag or symmetrical flag or whatever you want to call it. Well, right at open, it came out and it dipped right at open, and then we had that breakout. And that created the first candle, which was the first soldier, two soldiers, and three soldiers. So we had three soldiers right there. Now, when I'm in the room and I'm saying you're on a time limit, it's great to go ahead and scalp them three soldiers and be out of the trade and go ahead and go off to your business. Take care of your children, go out, go shopping, head to the beach, or even take this trade at the beach, sitting on a lawn chair under a straw hut with a margarita sitting next to you. So after the three soldiers came in, it broke out and it pulled back and retested that soldier, and then we had the run the rest of the day. So every morning I call this trade out. I look for some kind of flag, some kind of pattern. It has to have a pattern, and I have to be in the now. We've had some pretty rough days here lately, and I remember the day before was a real rough day right at open, and we had that real hard sell-off. So more or less we came back some and we consolidated and had a nice breakout to the double top. So I said, hey room, we're sitting up here at a double top from yesterday's or the day before's high. It might be a good idea to go ahead and get out of this trade because this is a double top, and it's going to get scary maybe. And then what happened? We had to sell off at the double top. So you had a great entry idea, with a symmetrical pennant flag. You're out of the trade in 3 minutes. This is on a 1 minute time frame. Now I want to show you something. If I change this time frame to 5 minutes, you still will have the same kind of look. If I change it to 15 minutes, it's a totally different look. You're not going to know if that thing's going to break out or not. If you change it to a 30 minute, it's going to be hard pressed to know, but to me that's a fairly bullish sign right there with them long leg doji right there. That could be a sign of a breakout. And you change it to the 1 hour. 1 hour time frame, you had a double bottom. When you had that big long leg doji and it found support off the bottom of that doji, you might have been able to take that off that candlestick. I'm not for sure. But you definitely can see it on the 1 minute that this thing was setting up. The third time it broke out, 1, 2, 3, boom. You had the higher low. And you know when to get out of that trade. If you looked at the hour time frame and you had like 10, 15, 20 minutes to take your trade, you would have not known to stay in that trade or not, because it would have been kept going up and bouncing around and stuff. And there'd have been no signal to get out of that trade unless you run it up to the 200 and get out of it. But to identify the entry, like right here on the 1 hour time frame, you had three huge black crows. I would have definitely maybe even took that trade off them crows on with a tweezer bottom. So study these candle patterns. That's the 1 hour. There's your 1 minute. This allows you to get in and trades. There's a different flag right there. You stay in the trade. You notice that we have an ascending triangle right here. So that will still keep you in the trade if you're in the trade. And that's after them 3 white soldiers. Now when I'm talking to people in the room, I say 3 white soldiers on a lead out trade. This is a real good sign that this thing can keep running. It's very bullish right out of the gate. Right out of the gate, I'm going, this is a real good plan to stay in the trade. And then it created an ascending triangle, broke out of it, came back and retested. Then we had this little double bottom snake right here. Snake, breakout, pull back, higher, low, boom. It's just a trade I call out a lot. If you come in late to the game, it's all about chart patterns and moving averages. So there's your snake. You got your breakout, your pullback to a higher low, which makes it very bullish. So I teach this trade a lot too. Then your exit idea would be the double top on the top of that snake, or just keep running it up. Depends, like this is a breakout right here after consolidation. Then you realize, oh shit, man, we're getting up here to that double top. Might want to get out of the trade. And then she came back and found support off that ascending triangle. So we had a symmetrical flag, pennant flag, 3 white soldiers is a continuation pattern into an ascending triangle with a nice little breakout into another snake with the double top exit of the previous day high. And that's it for the IWM. Something to watch for right at open. Look for some kind of, in summary, look for a pattern of some sort. Now, on patterns, all you got to do is type in, I'll show you how to do it if you're beginners. Type in bullish, stock, patterns, hit images, then start pulling up some of these images and start having a reference flag or something that you can say, okay, I'm going to be watching for these kind of patterns. I'll show you the ones I like to look for. It's symmetrical, pennant, and ascending and descending flags. Double bottoms, triple bottoms, inverted head and shoulders. Try to look for the bullish ones. Better just show you what I use. Make it real simple, you know. Double top, head and shoulders, rising wedge. Double bottom, inverse head and shoulders, one of my favorite patterns. Falling wedge is a great pattern for trading. When you come out of a snake and you create a falling wedge to the upside, we just talked about this one right here, the bullish pennant flag. And you got falling wedge. This one here is a popular one I like to call out a lot. There's your symmetrical flag, kind of what I was showing today with that pennant. We got a descending, which is bearish and bullish. It depends on being in the now. Same as bilateral patterns, sending triangles. So that it can go either way. But you can tell very much so what's bullish and what's bearish by looking at patterns and then following them up with candlesticks. Look at your, let me show you what I mean by that. Right up when you're looking into the, here's one that I like to look at. Inversed head and shoulders. Very popular flag right here on the 1 minute. And this one here is one of my popular ones. Bullish flag. Take it on the triple top breakout. Triple bottom sign to get in the trade. Ascending triangle, head and shoulders. Descending. Falling wedge. Symmetrical. Double bottom. Triple bottom, rising wedge, symmetrical triangle, and double top. Memorize all them. And this is one thing that I like to watch these candlestick patterns on the reversals. Bearish engulfing. I like to look at them candles. They give you a clue if they're getting ready to reverse. Bullish and bearish. And then learn your dojis. And that'll help you get out of these trades real early, like a hammer right here. Inverted hammer. Inverted hammer. You got your 3 bearish soldiers or 3 black crows. 3 bullish soldiers. A lot of people take profit, but 3 bullish soldiers is a sign that people are buying into the trade and that we could keep going up. But there's always a correction. 3 black crows. I'm looking for them dojis right after them. These are just 1 minute candles. Or they're 1 hour, or they daily, or whatever kind of candle you're looking at. However you want to trade the market. So that's the IWM. How to identify. See, even here, it looks like it's getting ready, wanting to break out. Symmetrical flag breakout with 3 white soldiers into an ascending triangle, into a snake with a double top exit idea. And you're out of the trade with a good profit. Even if you looked at the SPX that day on Friday. We called this trade out here, but this one here was another good one called out on Friday. We had I called an inverse head and shoulders right here. Then we had the double bottom right here into another symmetrical flag. See, this is called a pennant flag. And this is on the SPX, and we called this trade out also. And that's what you call pennant flag, and she breaks out. Then you have your 3 soldiers right here, which is continuation. Then she came back and created an inverse head and shoulders. And I called this trade out here, and this trade ran from $300 to $260, all the way up to about, I think it was $1,1700 into close. This trade here alone, right here, and this is the inverse head and shoulders. So you had a pennant flag. Take it out, take your profit on a double top. See that exit right there? Out of the trade. Double top, get out of the trade. I'm telling you, through experience. Because if you would have not got out of that trade and you had like $200 or $300 a contract, $80 a contract profit. And you got 10 of them, you're up $800. And you didn't see the double top for the exit idea, that's your own fault. She came back and retested a higher low into an inverted head and shoulders. So this trade alone here gives you plenty of time to take the trade if you know what you're looking at. That's an inverse head and shoulders. So each morning, SPY's the same way. It had the same kind of setup. Right here it opened. You had the double bottom. Created a symmetrical flag. Right here it opened. This is on 1 minute time frame. So you had a double bottom idea here with an inverse head and shoulders. There's your head and shoulder right here. So pay close attention to this. You got double bottom, which the shoulder lines of this inverse head and shoulders then, that turned into a symmetrical flag at open. Me, I would have probably took this shoulder line because it retested the second time on the dip, and I would have took that trade. Why? Because of that candlestick right there. That's called a spinning top. That's a reversal sign. That's a reversal candle. So I would have took that trade right there. And if I had to add on, as long as I kept getting my higher lows, I'm okay. And once I seen the formation of a symmetrical flag, I would have took the breakout and sold it at the double top. 10-4. Pre-market double top, get out of that trade. And then catch it on the 200 SMA or even off that another inverse head and shoulders here on the SPY. So you had two different opportunities to take this trade. So you got another inverse head and shoulders right there. Symmetrical flag breakout, pulled back into an inverted head and shoulders. And then look at the run on this thing. I mean, it's incredible how much money you can make on these if you identify them patterns. That's one heck of a run. What happened there? Why did it pull back? Let's get to a different time frame here. Because you're finding resistance up here. You got an inverted head and shoulders right here, which is a resistance line. Right there, and we almost hit that inverse head and shoulders right here. And that would have been your longer resistance. You take and draw that trend line from which is a double confirmation that you're getting close to a resistance and to get out of that trade. Pretty obvious. Then now we're back down here at a support level again. So what's it going to do? Is it going to come back here Monday and retest this 347 and find solid support and bounce up? Or is it going to fail that and end up buying a put to the next level? QQQ, same thing. Pull that 1 minute up again. We had a nice little breakout right here. And then we came in, had snake, pull back, breakout, high or low with a real nice hammer. A lot of these candles right here are bullish. A lot of them candles are bullish right there. So draw your trend line. There's your flag. Snake, breakout, pull back, high or low, boom. Then she came back and retested again. So you have to make these fast. But there's your flag. There's your breakout. There's your soldiers. 3 white soldiers. So that could have been your exit idea right there. And get out of that trade. Then you had to double bottom, triple bottom here. So you draw your trend line. Then you end up having another trade idea with a triple bottom. I tell the room about this all the time. If you got a triple bottom, man, and it holds, I mean, that's all I've been seeing this year is triple bottoms. And confirmation of support. Beautiful trade idea right there. Oh, come on now. Was it 370? Right up to the trend. And we got this off on the daily. See the daily time frame? Found resistance right on that top of them bodies. So we're getting ready to squeeze on this one too. It's either going to drop and hit this 51 again, or it's going to break out the triple top, come in Monday and break out of resistance and try to break that 372.85. So the bottom part of the story on how to get the beach trade done is just look it open. Our example was the IWM. I called this one out Monday or Friday. Identify that pattern. Candlesticks. Symmetrical flag. Snake. Boom. And that was the IWM Russell 2000 small cap index. This is a sneaky snake trading strategy. Have a great day.